The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 12th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but way more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone and dial on in at 877-927-6648. If you can't dial in, we've got you covered. Just go ahead and send me an email, steve@tfnn.com. Inside the subject heading, if you'd be kind enough to put radio show question, of course, in our Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got all indices in the green with the exception of the transports. The Dow's up 160, 0.6%. The S&P's up 19, 0.6%. The NDX 100 up 0.8% or 65 points. Russell now just slightly green. Semis are up 0.5%. Same with the New York Stock Exchange and the Wilshire. It is the transports that are down 0.25% or 27 points out there. Gold is straight out at 15.07. Silver is up 2 pennies. Light sweet crude is down 69 cents. Leading the charge to the upside, dollar-wise, it is Amazon. It's trading out 18.48. It's up 1 4/10%. Google's up 19. 10x Genomics, that is a new IPO. That's up $16 today. Transdigm up 14. Chipotle up 10. To the downside, it's AutoZone down $9. Universal Display, which is OLED, down 3.5%. Boeing is off 6. Solar Edge Technologies down about 8%. Or 6 buckaroonies. We've got a caller on the line. Let's go speak with Brent. Brent, thanks for calling. Thanks for holding. How are you today?
Doing very well, Steve. Thank you for taking the call. How are you doing?
I'm doing well. My pleasure. Always good to hear your voice. And you would like to discuss Goldilocks, I believe.
Yeah, I was just going to tell you about a trade I did this morning before we go into the analysis of that.
Go right ahead.
I've talked to you before about I like to do the weekly options on, well, it can be anything, but I like to do it on a GLD.
Okay.
On gold. There's enough activity in them that they're easy to get in and out of.
Sure.
There's enough of a spread in gold that you can kind of get the type of movement that you want. And then if you let them get down to, this is kind of ideal either. Sometimes I'll do it Wednesday, but I like Thursday or Friday, where they're pretty much down to nothing as far as any kind of premium. You can pick them up for relatively cheap. So I did they're the 142.50 puts on GLD. I was able to pick them up for 40 cents this morning. I actually got out of position right before I got on the phone with you, but
okay.
I was able to get out at $1.40. But that
nice.
kind of trade I like to do. They don't always work, but I do like. You don't have to put a lot of money at risk, and when they do, it normally happens pretty quick. You're going to know generally within the first hour or so of trading the things if it's kind of going your direction. And
yeah,
this
so
it happened fairly quick for me, and then I got to a point where that's good enough. I'm not going to get greedy about it. So, anyways,
sure.
I just wanted to relate that to you, and then get your thoughts on gold itself and just what you think about it.
Sure. So the nice thing that has occurred since I put the newsletter out this morning, so it was when I was leaving on my way to the dentist, is there's a brand new daily profile that has formed. Now, this is going to be great information both for buyers or sellers, for bulls and bears out here. And so this profile is bullish in structure. And the bottom of the box, so I've turned price off. That way it's very easy for everybody to look at. It is the blue horizontal lines. You'll see several out here. You're looking at the ones furthest on the right. Maybe I'll just go ahead and put a yellow rectangle box around it. That way people know exactly what it is I'm looking at. So it's right there. And the reason why I say it's bullish in structure, folks, is because the center of that profile, which contains both buyers and sellers that believe there's fair value, in between the bottom of the box at 14.99.50 and the top at 15.36, since that in proximity is closer to the bottom, and quite a bit closer to the bottom than the top, there should be more buyers lined up in the 14.99 to 15.06 level. And if there's a close below the bottom of that box, there's nothing more bearish than a failed bullish pattern. Now, price had closed below the bottom of the prior box, the daily box. That was at 15.0840, and the bottom of the weekly is 14.8920. What's really nice is in a small range here, Brent, we'll say between 14.8920 and 14.9950. It will provide clear signals to traders out there of gold. So now when we turn price back on, we can see that certainly there was a sell-off in gold from the high today. There was a bounce. Maybe that occurred after Mario Draghi said, you know, QE to infinity on his way out in hopes of saving the European Union, which is not going to happen. But that's neither here nor there. We can see that prices tested the bottom of that profile as well today. I don't know if that was before or after, but so there's a nice range out here to help us identify what really is going to take place in gold. Now, gold has generated a nice topping pattern out here. We've reviewed this for folks out there, Brent as well. Price moving higher, doing less relative energy. You had the bearish reversal candles. We've had several up at the highs. Prices moved down. It's been pushed down to the support level. It did break support. As I say, it did that on September the 10th out here. But we do have another level of support for us to watch. It's just kind of consolidating sideways. So that's what I see when I take a look at gold here thus far. And that new profile is probably the one that provides us with the most amount of information. Any questions so far?
No, I think that's it. I guess this could potentially be setting up an AB equals CD with that being the little counter trend move that it had today. But I guess we'll see how it plays out.
Yes, and so since you pointed that out, let me see. I should have that. Wow, that's pretty weird why I don't have that on my screen out here, but I'm going to add it just so that folks can also see, you know, the pattern that you just identified, the A to B equals CD pattern. Man, Lord, here we go. Put it on my screen out here. And so that is assuming, and Brent nor I can know this to be a fact just yet, but if today's high was the B point of an A to B equals CD, it would give us a one-to-one price projection of 1458, 1-1.27, 1437. But it's got to close below 1492 before that happens out there. So, hey, best of luck, Brent. Great trade. And glad that you actually took it off with that new box that's out there.
All right. Take care, Steve. Thank you very much. Have a great day.
You too. We'll be right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. Dow's up 141, S&P 17. So we're going to continue on with gold because we had a question earlier in the Tiger's Den from Peter in Park City who wanted to take a look at the gold contract and the Japanese yen and the bond relationships to gold. So what we can do here for Peter, for you out there, is we can produce. And we can take a look at the correlation. Now, the top portion of our screen out here is the gold contract. We're looking at the December gold contract here. Right down below that is the U.S. dollar, Japanese yen. And then below that is the correlation tool. Now, this correlation tool, let me see where, I think I have it set to 10, but let me just find out what I actually do have it set to. Correlation, I've got it set to 10. I do. Okay, so the bottom panel then is taking a look at Peter and everybody else is taking a look at the last 10 days average direction. So it's taking a look at, is there a directional correlation? Is there a directional correlation between these two instruments? If the bar is above 0, it says it's a positive correlation. If it's below 0, says that there's an inverse correlation. So at this stage here, using a 10-day period of time, says yes, that is correlated. If we go ahead and switch it to a 5-day period of time, you can see it changes a tad, but for the most part, you'd say it is correlated. The average time to really take a look at this tool is about 20 days to get a really decent average. And you can see the correlation. Now, what we can do out here for Peter is he wanted to take a look at this with regard to Treasury bonds. So how am I going to do that here? I'm going to do that by using, well, I'm going to use a synthetic contract, I think, in order to be able to grab the data out here, Peter. So give me a second to get that inserted in here. Let's do that here as well. Delete that. Get me going here, ZB11. And so here, so now what we've got, this is the 20-day period of time out here, Peter. You're looking for the correlation. This would be the longest. So this is over a 20-day period, the average, and you can see directly correlated there, directionally, that is. If we go ahead and we go down from 20 to 5, just to go take a look at that, you'll see also fairly well correlated out here. So if Peter wants to use that as a correlation to try to gauge what gold is going to do. Let's just go ahead and stick with the bond piece of it. So if we take a look at the bond piece of it, here's what we know. We know that Treasury bonds, you and I know, Treasury bonds made a nice top. They did it with a Rhodes momentum indicator signal out there, one of the best tools and patterns to help us identify tops as well as bottoms out here. And in this case, we're going to be in day number 7 of a TD setup 9 count. We know that a potential bottom, in this case here, could form on bars 8, 9, or the bar following 9. So we could have 3 more days of, let's say, a move lower, with one of those days at least taking out the low of today. Only one of those days would have to do that day, 8, 9 to the bar following 9. We also know that the target is 153.27. That is where T-bonds, the December contract for T-bonds, broke out. That's its price breakout area, 153.27, 30 seconds out there. But what this chart says to me, what I believe this chart says to you, is that Treasury bonds want to move lower. Well, if that's the case, and we just spent time with Brent taking a look at gold and pointing out the new daily profile that had formed out there. Again, let's just simply go back to that here real quickly. The reality is that by closing below the TAS market profile a couple of days ago, that told us of a change in trend, because yesterday price stayed below that. Today, what we saw was a move up towards this perigee pivot point at 1536. It was about $3 or $4 below that area, and then moved down lower. Now it's found support where it should. That is gold, the bottom of that bullish structured box out here. But the bottom line here that I would have to say, Peter, is you get that close below 1489.20, and it tells us about an intermediate term change in trend on the weekly basis out there. And that produces a much lower price objective for Goldilocks over time. And again, I say that over time is probably through the early part of next year, gets us down into that 1200-ish range. But you got to take things one step at a time. I'm not making that as a projection or forecast just yet. I would do that with a close below 1489.20 out there. So that is the full analysis on Goldilocks. Peter, I hope that helps you out, as well as Brent and everybody else out there. Be careful because of the tops that we took a look at. But the nice thing here about, because of the directional correlation between gold and the mining equities, is to watch 1489.20. You want gold on that wall to hold 1489.20. If you see it close below that, quite frankly, consider closing out your long trades. Forget about adjusting the stop. You will have gotten the signal that price wants to move lower. So that's Goldilocks. Now, let's go take a look at maybe and that target area on the T-bonds level. The reason why that's so important, the reason why that comes out, we sort of discussed that a bit yesterday. When I did the 1 p.m. update, I filled in for Tommy doing the 1 p.m. update. What I did during that, and I just want to bring this out to show you as well, just so you can see, again, how this works over and over and over again. Here's the Dow Jones Cash Indice. Generates that Rhodes momentum bottom signal, that morning star pattern back on August 16th. At that stage, when that identified a bottom for us, if you would have asked, if I would have asked you, where is the price target to the upside, your response would have been, because of the TD setup 9-count pattern and where price had broken down from, it's the solid green line that you see at the top of your screen, 27,281.65. There's no magic here. But what price has done is price has gotten up and it has tested that level. It has tested it. So far, it's rejected it. Today is the day following bar 9 as a high. And this says that there could be an impending top. Price has made it back to resistance. I'm not willing to make that call because I don't have anything on an intraday chart anywhere that suggests that there's a break of support on any time frame out there. So it'd be very hard. And I also know this pattern can fail because there can be huge momentum, strong momentum, and therefore, if there's a higher high tomorrow, that would be the signal. Don't back up the truck. Back up the truck at bottoms like these with this tool and this indicator. Don't back it up now while we may have a breakout. Maybe it's a false breakout. I don't know. But right now, look, it should not surprise you or me if for some reason there's some kind of tweet overnight or what have you. Or it doesn't even have to be a tweet. Whatever it is starts to push price lower. If that happens, we won't be surprised. We'd be willing to take some action at that stage here. Don't worry about trying to sell the top tick at this stage, but I just simply want to prepare you for what at least the charts are communicating to you and I. And it is universal and across the board. And I don't see this too often, but we see it right now. If you take a look at the S&P now, here I don't have a breakdown level. There was no TD setup 9 count in the S&P 500, but today is the bar following bar 9, so it follows along with that pattern. And when I say every single, I mean every single indice. Doesn't matter what we choose. Here you can take a look at the NDX 100. Again, the bar following bar 9, making a high out there. So in all of these, and it's the same thing in the equity futures contract. So that's the beauty of it. If you see price overnight in the morning trading above today's highs in the equity futures contract, so you already know what to anticipate and expect. That will already be communicated to you that the TD setup 9 count pattern did not identify a top and instead gave you a momentum signal. Hey, folks, check this out. If you don't see this too often either, even the spot volatility index to the downside as a TD setup 9 count. But 1316 is still its target, and we're only at 1427. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back back, folks. So one of our listeners wanted to take a look at the Great British Pound U.S. dollar. Let's take a look at this stock chart out here. I believe this individual is looking for a long position in it or a trade. And we sort of covered this yesterday. And so, Justin, look, the chart pattern here suggests to both you and I that price does want to move higher. I don't, and you were asking for a vehicle to trade this. So my assumption is that you were looking for some type of ETF. And unless we were to see some type of major bottoming pattern or signal here so that you were going to hold on to that ETF for a long period of time, then I would go ahead and throw that out there. But I don't see that as what is unfolding here. If there's anything that's unfolding is that price is trading in between support. Breakout support is 1.205. And resistance, 1.252, and we're 1.23 out here. So I would just be patient. I think there's better places for you to look than the Great British Pound. Again, we didn't have a conversation. You just sent me an email, asking me to take a look at it, giving an inclination of what your thoughts were on this. And I don't see this as some kind of long-term trade out here. Now, forget about the oscillator unchanged. I'm just going to change this to a monthly time frame chart for us just to see if there was any bottoming signal here. Again, bottoming signals being, Rhodes momentum indicator signal, a wave count, which there's no way that, and you're only in wave number 3 to the downside. Again, forget about the squiggly line. That's just simply because it's set to a daily time frame. We're on a monthly time frame chart out here. Again, I'll switch over to a weekly just to be thorough for you, Justin. Now, from a weekly standpoint, you did last week have price moving lower, doing less relative energy, and you did get a bullish reversal candle. And here this would say that price could bounce up to 127. There'd be nothing wrong. But ETFs are a real tough way to be able to trade a currency pair out here. And plus, you need to be making your decisions based upon what you see in the currency pair, not the ETF itself out there. So at this stage, my suggestion is to stay put unless you're going to trade the Great British Pound US dollar currency pair itself. And then you're looking at being able to use real-time live stops during the day, evening, while you sleep or what have you, and you're not going to just simply blow a fortune with the trade going against you out there. So the euro looks to me right now like it has formed a bottom, enough of bottom for it to continue to bounce, but not really one to set up as a longer-term trade out there. So, Justin, thanks for writing in. I hope that helps you out with regard to that currency pair. Ruby wants to take a look at JCPenney. So let's begin by taking a look at JCPenney by looking at its 3 different time frames: daily, weekly, monthly out here. And what we can see is that nice breakout above its TAS profiles way back quite a while ago. There was a breakout with wide price spread and accelerated volume. When I say quite a while ago, it was only August 29th, so a couple of weeks ago, but that was a clear break of resistance. Price simply has resumed higher, now almost doubled from that point, getting up to the $1.25 level. Right now this week, depending on where the close is yesterday, if there's a close above 92 cents, JCPenney will have broken out above resistance. It's sitting right now from a monthly perspective, Ruby, right at the bottom of its monthly TAS market profile. That is at $1.09, you're trading at $1.10, but closing back inside there would be nice, and you could see $1.62, $2.14, something along those lines. Now, Ruby has been taking a look at JCPenney from a seasonal standpoint, going back really for quite a ways, 30 some odd years out here. If we take a look at the daily time frame, we're in September, and what yesterday was for JCPenney, Ruby, and really for everybody else out there, look, this forms a bottom, JCPenney that is, on a daily time frame chart with the Rhodes momentum indicator. How does it do that? It creates that bullish piercing candle way back here. So price had been moving lower, doing less relative energy, but you never saw a close above Stevie's red line, nor did you see a bullish reversal candle. This is the whole reason that you don't buy or sell the 1-to-1 A to B equals CD, or any pattern, quite frankly, when it's forming. You wait for some type of confirmation. But don't trust me. just trust your eyes out here, because you can see it repeat over and over and over and over again. So there you get your piercing candle out here, giving you that bottom. Price just moves sideways. It closed above Stevie's red line out here. Breaks above its first level of resistance. We know that was at 82 cents. That's where price had broken down. Goes on to make a TD 9 count. It completes that 9 count pattern yesterday, with the bar following bar 9 being the high. Now we're seeing price pull back here. We also see that Stevie's green line was previously red just a couple of days ago. The phenomena that takes place there is we typically see price and that line catch up to each other. Now, right now, Ruby, that line number, the oscillator and change line, is 83. Price is $1.11. If price continues to move lower, this line price may still continue to move higher. I don't know where that final test might be, but here's the deal. I know you're waiting for October. It's September the 12th out here. If you see a test of Stevie's red line, green line right now, and price bounces off of that, that could be your entry point, because that would be the bullish scenario test out there. Price pulling back to test a level of support. That's what the oscillator and change line would be. And if it bounces off of that, then that would say, wait, maybe it's not exactly October this year. Maybe it's a tad bit earlier. If price closes below that line out there, wherever that might be, in the 83-cent area, then what this is saying is you should focus your eyes on 57 cents. That is where JCPenney, in essence, broke out from a price standpoint. And so if you see it close below Stevie's green line, it tells you of further retracement. Well, for us, that further retracement is easy to identify. It would happen to be where price had broken out at 57 cents. The exact opposite of what you and I just looked at for the Dow Jones Cash Index out there. Except in that case, it had formed a bottom and it moved up to resistance. Here, well, we don't have really a topping pattern. Well, we do have a topping pattern. It's not the Rhodes momentum indicator top. It's the TD setup 9 count. So these are the patterns. Now this is when we take a look at the daily time frame out here, which I think is kind of what you're more interested in at this stage of the game. But if we do look at the monthly, just for the heck of it out here, what do we have going on? We also have a monthly chart out here for JCPenney where it has a Rhodes momentum indicator bottom potential. Potential because I don't know what the candle close is going to be at the end of the month. If September 12th were the end of the month, you've got your Three River Morning Star, and the monthly chart is confirming a bottom pattern for you. And this would say price over time could get up to 436. Maybe that's your Santa Claus rally stocking kind of trade out there. Now it's $1.11. It's at $1.11 right now. We don't really get opportunities like this too often. You know, Brent was telling you, describing for you one of his lottery ticket opportunities, so to speak, that he took on a trade for gold. Here at $1.11, what you could do for JCPenney is forget about, you don't have to do the option trade out here. You could, but you don't have to do the option trade. And if you want to do the option trade, call in and talk to David White. See if he can give you some advice on that, because he's the expert there. He's the master. But here at $1.11, you could take 1% or 0.5% of your free working capital, whatever that might be, whether it's $100 or it's $1,000, and you just simply use that. That's your risk capital, and you buy that many shares. At $1.11 on $1,000, it's almost 1,000 shares out there. Stick it in your drawer. And it's an unexpired option trade. The monthly's giving you a bottom signal. The daily is as well. Suggests maybe there's going to be a pullback out there. But, Ruby, I think you might be onto something here. The unexpired option trade. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 134, S&P 16. One of our dinners, Satish, writes in and says, do we see resistance in Google at the 1240 level? So let's begin by taking a look at our 3 TAS market profiles, daily, weekly, and monthly. And what we see out here, Satish, the only resistance from a profile standpoint is 1251.09. That is the top of the daily profile. Price is trading within it. It is a bullish structured box. Center line at 1222, closer to the bottom at 1207 versus 1251. With price being above the center of the box, both where buyers and sellers are, but we had buyers at 1207, buyers at 1222. Since they've been able to push it past that little congestion area, chances are price are going to go tag the 1251 level. I'm not saying to sell it there or go short Google at 1251.09. We have to look to see if there's any other patterns in play out here. So for those other patterns out here, let's go take a look at Stevie's other charts. Well, Google is behaving just like the NDX 100, just like each of the cash indices, as well as the equity futures contracts, where this is a day following bar number 9 of a TD setup 9 count. If the high is in, forget about 1241, although we're playing at 1239. So I guess your 1240-ish area, we could say, okay, the potential of the resistance being the high of the day, whatever that might be, because of the TD setup 9 count. Would I go ahead and sell right now? I would not. I would just simply suggest you wait for some type of confirmation, because if there's a higher high tomorrow, then that pattern is negated. And not negated like we don't pay attention to it. It would have important meaning, which is that there's a strong momentum to the upside out there. So so I don't see, other than that, if I look at a weekly time frame chart here for Google, price this week is above the top of that profile level, 1209. This would say a price could easily bounce to 1289.27 on a weekly basis. So if you take a look at Google, it broke down at 1289.27, forms the TD setup 9-count pattern. Price moves down to where it had broken out at 1014.07. So really, Google in quite a consolidation zone between 1014 and 1289. That's what I see on the weekly time frame. Nothing out there on the monthly for me to shake a stick at, so we won't shake a stick. So Satish, I hope that helps you out with regard to Google. Watch tomorrow's action. Watch tomorrow's action. If it makes a higher high, probably that 1289 level we just looked at inside of the weekly time frame chart becomes your price objective. Another question, this one coming in by email. This from CJ. Charles writes in, he says, hey, Steve, on August 19th, you correctly predicted that if the Dow would close above 26,131 and 26,427 next, and if we surpass that, then 27,281 was likely. The Dow's at 27,284 as I write you. What do you see ahead? Love your show. Never miss it. Charlie from Houston. So, Charlie, I think so. Thanks for thanks for monitoring all of that stuff for us. That's terrific. But what I see ahead is the potential of a top. There's just no other way for me to, I'm not going to call a top just yet. I don't think we need to do that. If there's a change in trend, because we're in this consolidation, by the way, the markets are still in a consolidation. That is not done with. That is not over. It kind of looks like this. You can see price up towards the top of the consolidation here in the Dow. So there's no breakout that has gone on just yet. We've got the daily TD setup 9 counts, potential topping signals. Now we just have to wait to see what the market does. And so it's really tomorrow, this evening in the futures contract may be telling to us, look, here's the futures contracts. Let's go take a look at those. Oh, they're right here in front of me. Here's the Dow as an example. So just stick with the Dow. You're referring to the Dow cash indice out here. You can see now the Dow equity futures contract has not made its way up to its breakdown resistance level of 27,349. We are in the December contract right now. That's what we're taking a look at. September rolling to December today. So we're looking at the December contract levels out here. So 27,349. It's at 27,280. It's up towards resistance. I won't be surprised to see the market turn down from here while everybody is hooping and hollering. But am I willing to take a trade on it? No, because I would if intraday, Charlie, if intraday, shoot, I lost that chart. What the heck did I do? Oh, I must have just deleted that chart. Well, we'll get my screen back here. Sorry about that. But normally I'm not that foolish. Apparently I am that foolish. That's okay. I can rebuild that. But normally, Charlie, what we would see, and I'm going to just stick with the Dow out here, is we would see if there were to be some type of signal that today was the high, we'd see some type of break of support. Now, maybe it comes tomorrow. I don't know. If you're going to ask me what's the support level on the December contract for the Dow equity futures contract, well, it's pretty simple. It's right now, it's 27,028. Now, there may be a new TD setup 9 count that occurs on a 30-minute basis between now and its contract close, or even this evening out here, although that would kind of start to get a little bit risky. But if there is a new one, well, then there would be a new level of support. Right now, I can tell you what that number would be. It would appear to be 27,240, but I don't have that as a count. But hey, look, here's the 9 count. You can see last night at about 7:30 when there was a nice big move to the upside, some news related or tweet thing or what have you, but still was a TD setup 9 count that identified the top price pulled back. So the pattern, so this is why I say, Charlie, to everybody out there that's listening, let's just simply not be surprised if in fact that's the way things unfold. But I would rather you wait and see some type of intraday time period to at least see some signal of a potential change in trend. And we just don't have that. If you were to look at the horizontal trading ranges, which we'll do right now, here's the ES Mini. It has a bit higher to run before it would run into its rising trend line out there, which may contain price, maybe around the 30, 40-ish type level. But if it closes back today below 30.14, that wouldn't be surprising to me. That's the midpoint of its daily horizontal trading ranges. Take a look at the NQ. It's tagged that rising trend line. Would suggest that the move could be over, so complements the TD setup 9 count. Dow equity futures contract doing the same thing, the rising trend line, price getting right up into it. So really, you've got the market with its back up against the wall. I don't know that you hear this anywhere else. You might hear it here at TFNN. I don't get a chance that often really to listen to the other guys out there, just too many other activities and things going on. But I know it's not what I hear from the boob tube necessarily out here. So just preparing you so that you're not surprised. And likewise, if we do see that further move higher, Charlie just tells us with regard to the Dow, what's the next area? It's about it's about 320 points higher from where we're at right now. 320 points higher on the Dow would take you to about the 27.6-ish type a level out there. We're 27.290. So I hope that helps you out. I think I've covered pretty much about everything that I can. HD writes in, he says, maybe a radio show question. And the reason is because he's asking about one of our trades that we just put on yesterday. It's so new. I'm going to answer your question just simply, and I'm going to send you a direct email. I actually like what we saw take place today, which was a rejection of those lows and confirmed the reason that we entered that trade yesterday. And price may close above the top of that box today, really confirming that Rhodes momentum indicator signal. But I'm going to send you a private email and just to answer the rest of your questions. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So currently the Dow up 155, S&P 18, NASDAQ up 64. Russell just slightly in the red, off 1 point. And a question coming in here from KS. KS writes in and says, given the unpredictability of the Dow going up or down at this level, this is a good time to buy 30% and then the other 30% or 33% based on market conditions for the next 2 weeks. Absolutely not, KS. Absolutely not. I apologize for not being clear. And so let me try to correct that and to be as clear as I possibly can be, at least from Stevie's perspective. And that is as follows. Number one, and maybe the question came in while I was reviewing during the last segment out here, but just to make sure. And you were talking about the Dow, so I just simply want to come back to the Dow. And then here's a daily time frame chart that shows you the diagonal trend from the high in January 29th, 2018. You're just tagging the high on October 3rd of 2018. Those are the only two highs you need to tag. We did see price try to break out just slightly above that area back in the early part of July. But we never saw any kind of wide-ranging bar, just some small-bodied candles out there. And then obviously there was that push lower back into the 25,000 level, which was the horizontal trading range area. And now today, prices tag that line again. So I would never... You're asking about buying the Dow. I'd rather see you sell the Dow with 30% than buy the Dow. I'd really rather you see you do neither. I'd rather wait to see some type of confirmation for that sellish type signal. But I cannot ask you or anyone else to buy resistance. And as David's writing in, no position is a position, and there's no doubt about that. That's the wrong time to buy. I would rather you learn the Rhodes momentum indicator, topping and bottoming patterns, and that will do you a whole world of good out there. A whole world of good. But now is not the time to buy. Let's wait and see what tomorrow brings. Let's review that question tomorrow. Folks, stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you tomorrow. Fantastic Friday from 1 to 2. Take care.